Good morning, good afternoon, good evening. It's Ryan and soon to be Angie when she joins for the Ag Markets Blast. For those not aware, it's a very much a rapid roundup of the latest pricing, flows, and market moving news. Here she is. She's so punctual. We've both been chewing Ritalin on the sidelines. I'll let Angie join and then I can read off the legals. Co-host, come on down, Angie. Hello.
I just boomered myself by not hitting the mute button. So I'm like, I'm here. Why can't you hear
Uh,
me?
well, do you know what? I would love to kind of laugh at you, but I do that about 3 times every week.
It felt like, well, I was going to use a reference you probably wouldn't maybe not get, but Bill Cosby and Ghost Dad, when like he didn't realize he was gone.
Ah,
That
I do
was me. I
remember
was like,
that.
I'm
I do
here,
remember
and you didn't know it. It was sad. So, but here we are.
Perfect.
We got the
Here
band
we are.
together
Let me
again.
let me do the legals. Nothing discussed on this space session constitute trade or investment advice or infers any kind of endorsement by PIQ Global Limited, trainers PIQ or PIQ Suite, or indeed its affiliates, which includes the hosts, which is, as you know by now, is the awesome Angie and myself, less awesome Ryan. So yeah, just a reminder, this is our very brand new rapid roundup of the latest pricing, flows, and market moving news for the ag markets. So Angie, over to you.
Yes. All right. Well, the letter of the day, if we were watching Sesame Street, would be T for tariffs, or
And
T
Trump.
for Trump's tariff
There you
threats.
go.
There you go. Like we've even got
Oh,
we got a
bosh,
triple three
bosh.
there. So and so that's what we're going to be paying attention to right now. The markets seem to be taking it relatively well. Some folks are saying, oh well, it's because he had threatened 60%, so 10% on China really isn't overly concerning. Or I mean, go ahead and insert your reason as to why beans didn't drop like a hot rock, overnight on this news,
Right.
whichever you choose. I think really when it comes down to it, a lot of folks are recognizing, like, first of all, yeah, 10% tariffs, a lot less than 60%. Secondly, just speaking specifically on China here, it's the first step in a negotiation. He had mentioned, specifically that he and Xi had been talking about, kind of trying to throttle down this fentanyl trade and some of these other
Yeah.
things. There's some talk of banks that are helping to kind of, finance some of this, thing, or at least help kind of move the money through. And that would be some of the targets that you would see kind of if you were to see direct tariffs or direct sanctions added, things like that. So I think really when it comes down to it on the China thought, first and foremost, everyone's kind of like, oh, 10% instead of 60. And, this isn't something that is overly news,
Just
right?
just one thing on that
Yeah.
worth flagging that I have seen it picked up that this 10% on China is on top of what would be 25% that he's putting on
Yes,
Mexico and
Mexico and
Canada as well.
Canada. Yeah.
And
Yeah.
yeah,
So
so
that's the
it's
other
again,
one.
it's very like you said, it's very convoluted, and also I think everyone needs to be everyone needs to be mindful. This is very much sticker price, as you said. This is
Yes.
all up in the air for negotiations. There's a long time until January, right?
Exactly. It's our starting point, and one of the things that you saw is so far we're waiting to hear back. Like China's obviously said, hey, no one wins in a trade war. Mexico's been
Yes.
kind of quiet. But then you saw Canada say, basically like, hey, we'll work on negotiating. Like, let's figure this out. One thing that was interesting I'd read this morning too, just kind of on this tariff threat and some of that other stuff, is that we had seen a threat by Trump to Mexico in like 19. They ended up mobilizing some of their National Guard, and we saw a big, slowdown in those crossings, the illegal crossings that
Yeah.
we had seen. So it has worked carrot and stick style before. We'll see if it does this go around.
Yeah. Yep.
So
Perfect.
so yeah, and then step two, right? We've seen the
Yeah, yeah.
conversation, or bullet point two, the conversation overnight of China kind of buying a bunch of Brazilian beans. This is fun. This will be something that we'll see quite often. It's been a transition in the market structure that's been taking place for several years now. Yes, it was kind of, I guess you could say, exacerbated by the first trade war, or at least heavily driven by the first trade war, where you've seen these massive expansions in Brazilian soybean production. So far, so good in South America. The crop looks like it's getting off without a hitch. Now we are, a few weeks away from really some of the most critical periods of time when it comes to production weather and things like that. But we'll be waiting and seeing. So the bean price for new crop out of Brazil right now, because of the anticipation of such a large crop, because they know that they're going to have to figure out a place to put it and it's going to have to work
Right.
into the export pipeline, it's a heck of a lot cheaper than US beans, February, March forward. We've already seen a pretty aggressive approach by China in buying these beans, because there was at one point a dollar discount when it came to purchasing new crop Brazilian beans versus new crop US beans. And so we've seen a slowdown in their purchasing, but a more aggressive selling pace by the Brazilian farmer and the Brazilian exporter, because they feel more confident about what they are seeing from a production
Right.
standpoint.
Yeah.
Wouldn't be surprised to see it pressure cash markets in the short term. Wouldn't be surprised to see it maybe slow down some China purchases from the US from a purely economic standpoint.
Yeah.
And a lot of folks will say it's tariff driven. Maybe it was from the start, but now it's economics. China is going to buy,
Well, this is it, right?
from who
So
makes the most sense to buy
yeah,
from.
so not only does it kind of ticks two boxes, right? Not only are you getting them cheaper, but you're also avoiding the tariff like
Yes.
ruckus, and yeah, and also it gives you a bit of leverage. You can say, well, look, China could turn around and say, look, we'll start buying US beans again, but drop the tariffs.
Yes, yeah.
Um,
You're going to have to fix it. Like both
yeah,
sides can use
exactly
carrot
that.
and stick sort of approach, and
Yeah,
I think that's
exactly.
what we'll see. And that's part of why, in my opinion, you didn't see the markets fall off too awful hard. That, and we have to remember that the U.S. market structure has changed pretty significantly from the first trade war. We've seen a huge expansion in renewable, biofuels, especially driven, that are using soybean oil or vegetable oil as a feedstock. And if we do see these tariffs placed, obviously it's going to slow down our used cooking oil imports and some of these other alternative feedstocks that we've seen, and should help to bolster domestic demand. So, you see one thing on one hand, and on the other hand, something else happens.
Perfect.
So, and then the last
Number
thing,
three.
last thing for the day, we're going to be paying attention to, and we have started to see wheat correct itself a little bit here this morning. Obviously, wheat, from a technical standpoint, this 528 on the front month has held on to it pretty solidly for a while. We saw the same thing on the September board, and I think you'll kind of continue to see that. So we have some technical buying that's come back into this market, but also we saw this morning a few different reports come out. There's been some rumblings or rumors like that Ukraine and Russia are secretly negotiating peace. Even though I haven't seen anything that says that, there's been a few
Yeah,
analysts that have
same.
been kind of like, that's what they keep saying when the wheat's going down. Oh, there's these rumors. I'm like, okay,
Yeah.
cool. But what we've actually seen is Russia has expanded. They've taken over the most territory per the Kyiv Independent. They've taken over the most territory since the start of November, like basically
Yeah.
over the last few weeks here. They've taken over 232 square miles. That's the most that they've taken since 2022. Also, you saw a huge record drone attack overnight that started to target Western infrastructure, Western energy infrastructure. And so one of the things that's really helped to kind of keep Ukrainian grain production and exports, kind of uninterrupted, even in the face of the war, was that you had these areas that were protected. Now we're seeing the war
Yes.
spread. We're seeing Russia make more advancements. We've got these other weapons. The Ukraine's used the U.S. weapons a few different times. The long range this week that was announced. And so there's something there that we have to pay attention to. Everyone's kind of been like, oh, it's all saber rattling and hubbubaloo or whatever. But in reality, we have some long term things that are taking
Yeah,
place when it
exactly.
comes to grain movement that aren't going to be fixed quickly.
That exactly that. And also this ties in with what we said yesterday. It's linked as well as the Romanian
Yes,
election as well. Something that really ties in with this that we did mention yesterday. So please do check out our recording yesterday. But I think we're down to 7 minutes. I think we're getting much better at
I
this.
look at us go. I told you, like normal focused people would probably get this done in 5. So we
Yeah,
have
but that's not
goals.
us. Perfect.
No,
Well, and also shout out to our friends at StoneX that are listening. So yeah, big ups to them. Humble brag.
right.
Anyway, Angie, perfect. Guys, thank you for tuning in. Angie, thank you for being your awesome self. And we'll catch you and do this again tomorrow.
I will be here. I will start working on my bullet points now.
Perfect. Thank you, darling.
Thank you.
See you later.
Bye.
Bye bye.